My name is Tommy Humphreys, and I'm from the CEO.CA site, as Keith introduced earlier. And sitting beside me is Warren Irwin, who's the Toronto-based portfolio manager and head of Rosseau Asset Management. I met Warren in 2014 at a site visit in Saskatchewan when we both were on the NextGen Arrow property for the first time. And I was fascinated by Warren's story because somebody was asking him about his experience with Bre-X. And when he was a young analyst, he went to Busang in Indonesia and called bullshit on that story and shorted the stock. And so I met Warren and was impressed with his story when he was kicking tires on NextGen's Arrow property. And if you guys have been paying attention over the 18 months since, it's become probably the biggest discovery in Canada at the moment. And if we were here together, I was in Toronto in early October, and I ran into Warren kind of randomly, and he was telling me about NextGen's Arrow, and he said he couldn't, he hadn't seen anything like it, which he could tell you about. And he was just absolutely adamant that investors needed to pay attention to their drilling. So I said, Warren, let me call you from my office and let me record it and do a little interview story and provide an outlet for you to talk about Arrow. And so we did that in October. I was in my hotel room in the New Orleans Investment Conference and talking to Warren on Skype. And we did a story about how hedge fund manager shorted Bre-X. Now he's long NextGen. And he told us about his model of Arrow, and he put an estimate of 200 million pounds on the deposit. And people like Brent Cook, who's one of the most respected experts in the mining space, said that was crazy. All the analysts at the several banks that covered NextGen thought that was way too aggressive. And then on Thursday of this week, 6 months later, NextGen's maiden resource came out at 202 million pounds. So Warren, not only was he talking his book 6 months ago, but he made the 18,000 people that read that story, which is the busiest written story on our site last year. He made those people a lot of money, myself included. I bought shares, I already owned lots, but I bought more after talking to him. And I think the reason he went on the record wasn't because he is a shameless book talker. This is probably the first time in a decade Warren's been on the public stage. And I'm incredibly excited to have Warren Irwin here. So thank you for being here.
Thanks, Tommy. And your choice is good looking in person. Keith is right. You're quite a handsome individual.
Thank you.
Yeah.
You guys all have tastes in full-figured men, so I can't blame you. I want to start with Warren's personal story because we all have one and we're all here for different reasons. But Warren, start with your age and your intro to the mining business, please, if you can.
How old I am today?
Yeah, if you don't mind.
Yeah, believe it or not, I'm 52 in May, and I've been in the business 30 years. And a little bit about me, my dad worked a big oil company. We traveled all around the country when I grew up, and started out working for the big banks, Scotia and Deutsche Bank. Started Rosseau about 18 years ago, and I got a CFA, MBA, and a Bachelor of Mathematics.
Why mining stocks?
Well, when part of my moving around with my dad, I lived in Timmins for 4 years when I was a kid, probably from age 4 to age 8. And what really excited me as a young kid, I got a tour of the Kidd Creek mine when I was 5, and it would be 1969. And my neighbor worked there, and then I hear stories about the McIntyre mine, the Hollinger mine, and Noah Timmins, and the absolute fortunes that were made in the mining business. So I was bitten by the bug early, and it was always there. I always wanted to find a big gold mine, find a big discovery, be behind a big discovery. So that's really the passion that drives me. And a little bit about me, I'm not a publicity seeker, and you may not have ever heard of me, but I've been toiling away on Bay Street for 30 years, and I just felt, let's say last fall when you and I chatted, I said, my passion is finding big mineral discoveries. I've been behind and big shareholder in the Eleanor, Gold Eagle. Eleanor we sold to Goldcorp, I think, for around 600 million. Gold Eagle we sold to Goldcorp for $1.3 billion. I was a 6% shareholder in Aurelian. We sold that to Kinross for $1.3 billion. I was a big financial backer of Aquiline Resource. We sold that to Pan American Silver. big early investor in Guyana Goldfields, and others. So I really have a passion for that, but I've never felt that, you know, and in my career, when I was really just starting out early, you know, it was just after Hemlo, it was just after, and when I was really young, it was like in my early 20s, we just had Diamet. That was the big Kelowna-based discovery of diamonds up in the Northwest Territories with Chuck Fipke. And we also had, right on the heels of that, we had diamond fields. And really, since diamond fields, I don't think we've had a discovery that's really captured the imagination of everybody. And I remember what that was like, and I remember the $4.3 billion that was spread amongst investors in Canada and what that did for the resource sector. So I've always been looking for the big discoveries, and that's the passion that drives me, really.
Can you give the elevator pitch for Rosseau, like how many positions, how focused to resources, that sort of stuff?
Yeah, well, we're Toronto-based, although I don't live in Toronto. My home's in Western Canada, but we focus on where we can really add value. And in Canada, where we really add value, I think, is in the mining and oil and gas sector. We're really still a resource country. We don't have enough tech companies or medical services company really to make a living out of investing in those. And where we really have the edge over, let's say, American investors or international investors is mining, especially because we're here in Toronto. We know everybody. We know all the discoveries. We know what people are doing, who to trust, who's lying to you, who not to trust. And also, I spend a lot of time in Calgary with the oil and gas guys there. There's some interesting situations there from time to time, but that's really, you have to go where your strengths are, where you have an advantage, and we have a huge advantage here in Toronto over the Americans investing in resource stocks, because there are a significant number of them here, and of course there's also some in Vancouver too, but this is really a mining mecca.
So tell me a bit about I don't want to know all the names, but how many positions and how concentrated are you?
Yeah, we're unique in that. We try and stay concentrated. The reason for that is that we just can't know the names as well as we think we need to know the names if we have too many. You'll notice a lot of funds will have, like, 200, 300, 400 names in them. I don't know how people can follow those. You're really making a sector bet rather than a company-specific bet. So we like to stay around 20 names. So and we hold them sometimes for many years. We've the longest time I've held the security is for 12 years, but generally they're around 3 years, 3 to 5 years maybe.
Are there, is it like a simple 5% weighting for all those 20 names, or are you 10% or overly aggressive in some? And
yeah, we really crank it up on a few names. We've cranked it up a few times in the past, and sometimes they get cranked up just on their own. We owned Uranium. We had a 3% position, and it grew to about a 33% position. Also, we were doing some distressed work in Nortel in the early 2000s, and we made a fortune there, and it went to a little over 33%. And then also in 2008, we bought a distressed oil company at the bottom, and I think we made 12 times, 13 times our money within a few months. So it was a big chunk of it.
So how do you keep the calm to keep a position that concentrated in a portfolio? How do you not sell your winners too early?
Yeah, that's a very important question. A lot of people do sell their winners too early. We ride our winners as hard and as long as we can, and so I just ignore concentration. Usually what happens is, if you have a position, let's say, that goes from 3% to 33% of your portfolio, you just have to research it, make sure you're very comfortable with the downside risks you're taking, but you have to let it run.
Do you have a strategy to take your principal off the table at any point, or?
No, we just, generally there's a time where the risk-reward graphs cross, and it's just the amount of upside available is just not commensurate to what you're dealing with on the downside risk, and then you just gradually start moving out of it and reducing your position.
So your play is for a takeout in most of these stories, right?
Yeah, generally, the reason takeouts generally occur, the only time it hasn't occurred with any of the big discoveries we've made was in Guyana Goldfields, and they actually had to take it to production. And I don't know why that happened, but for some reason the gold companies did not buy that. The reason a takeout happens is all these mining companies are always, every day they go to work, they're mining out their resources, and they're not very good at finding new discoveries. So they have to continually acquire discoveries to keep themselves in business. So my view is if I don't find a discovery that's good enough for the majors to buy, I generally don't want to get involved in it.
Fair enough. Well, you're the man of the hour for making everybody so much money with NextGen and your prediction. I want to congratulate you. I know your bank account is congratulating you. I think a lot of people in this room have seen newsletter writers over the years show the chart of the life cycle of a junior mining share, where in the early discovery phase, when there's a lot of questions and people don't know everything, it has a wild run in the stock, and then as things become more concrete, engineering and permitting takes place, and there's expensive dilution to build the projects, and the equity becomes not so interesting until that ramp-up phase. So my question is with NextGen at a 400 million market cap, at what point to you does it become a boring development stock? And what is your sell signal for that story?
Yeah, the thing about NextGen is, I'll backtrack just a little bit. The reason we got the call right on NextGen is I'm a little old-fashioned. I've been around so long. I'm used to modeling by hand all these mineral discoveries, and that's a bit of a technique that's been lost with all the newbies out there. They're all trying to use these computer models, and they're just so complicated, and they rely on so many different assumptions. And with the advent also of directional drilling, you're getting these drill holes, and it used to be straight, now they're going off in all directions, and they're very difficult to model. So what we did is we probably spent about 100 hours developing the model on NextGen, and nobody else did it, frankly. And so we're sitting there going, the analyst who worked with me, Dan, he and I were sitting there looking at each other and going, okay, we ran the numbers, okay, the numbers are around 200 million pounds, and going, doesn't anybody else see this? And we just redo our numbers, and it was kind of like the feeling. It was kind of encapsulated in the movie The Big Short, where the guy's going, doesn't anybody see the numbers? The U.S. housing market is about to collapse, and all this distressed paper is going to just be worth nothing. All this AAA-backed paper will be worth nothing. And the same story happened to us. We're sitting there, doesn't anybody see it? All the numbers are public. All we did is tick the numbers and work with the numbers. And here's our model, and it's 200 million pounds. We're not making crazy assumptions. And you see all the analysts being super conservative, not doing the work. They were actually, and as an analyst, it's tough because, especially in today's day and age, when I grew up in the mining business earlier, 43-101 wasn't around. So you had to do your own work. But now a poor analyst is stuck with, if I put out a model out there saying there's 250 million pounds and the number comes out at 200 million pounds, I look like a complete idiot. And you don't necessarily know the assumptions RPA or SRK or any of those guys are going to be using. So everybody always errs on the side of being conservative. And so what we did is we thought we're reasonably conservative. We did our own model, and we were able to say that. And I definitely took a risk by sticking my neck out and telling the world 200 million pounds. But I really wasn't taking a risk because we'd done all the work and it was right there.
It shows how few people actually look hard at these Canadian securities right there.
Oh, and all my competitors have, they're really in tough shape. A lot of them are out of business and nobody has the guts anymore. And this is another indication as to why I agree with Ari Sussman from Continental Gold here, that we're absolutely at the bottom of the market here, near as I could tell. Unless something really bad happens, we've all seen all our stocks just get totally crushed, and there's tremendous value out there in the marketplace. And
so let's get back to that question, which was, at what point does NextGen become not interesting to you?
Yeah, sorry, I dodged that one.
Stocks just moved from 60 cents to $1.30, and in probably 3 months. It's still, in my opinion, pretty cheap for what they have.
Yeah, well, one thing I've learned over the years in following these stocks, and many of you I'm sure have too, is these stocks all have a life cycle of their own, in that you get a sense when the story starts getting a little bit tired, they start missing some drill holes, they start having some disappointments, and you think, well, now we're getting near the end of the story, we'll roughly know before long what we really have here. What's interesting about Arrow is we are nowhere near knowing what we have here. People say, Warren, when will we sell? Because we are the largest shareholder in NextGen. And they go, when will you sell, Warren? I said, well, you know, we are nowhere near knowing what we even have to sell, because we're sitting at 200 million pounds, which is an extraordinary preliminary resource, and that's just the start. If any of you guys are doing any modeling of hole 63C2 or 64C2, it doesn't take a lot of modeling to realize there's a lot coming at us with this winter drill program that'll be in the next set of results. And I could get into that a little bit if you want.
Well, the nuances, I know your expectations are it's going to grow like crazy. So the stock then, how big can a junior uranium stock get? And what is your expectation for NextGen?
Yeah, I saw some good work the other day by an analyst. I forget the firm that sent it, but it was at what point this will be a strategic asset in the uranium space. I think it's without a doubt. It will, very, very high degree of probability it'll get bought by a major, whether that be Rio Tinto, BHP, Cameco, who knows, the Chinese. So I looked at the takeout values, and the takeout values based on this chart was around $3 and change US. Post-Fukushima, but before Fukushima, it was around $8, right? So if I look at $3.50 US, or roughly 450 Canadian per pound, well, 450 Canadian times 200 million pounds, you know, we're at 800 million bucks. We're at, you know, 300-400 right now. Now, when you take that into account, and you also go, well, Warren, you're also expecting a significant increase in the resource. The numbers get very big.
Does the commodity price play into it? Is that your hope that uranium picks up too?
Yeah, well, that's an interesting one. Maybe one thing I want to get off my chest is like hole 63C2, okay?
Sure.
All right. Just to do the math here, they have 13.9 meters of greater than 61,000 counts per second on their scintillometers. Historically at Arrow, they've had quite a number of holes. I forget the number, I think it was 10 to 20 holes of that range. And they've averaged, when they get scint readings that high, they've had as low as 40% and considerably higher percent uranium in those holes. But on average, 62% uranium when they get a greater than 61,000 scintillometer reading. So here we are today. We have the results from hole 63C2 sitting in front of us with 61,000 counts per second. In front of us, we all know that, 13.8 meters. If you factor in, on average, what they've gotten in the past, and the assays aren't out yet, but if you took a 62% on that, you get a very, very big number just from one drill hole. Then there's 64C2, plus they've got, in total, 14 drill holes going into the richest section of the deposit, which is the high-grade zone of high-grade A2 shear, right? So there's some big, big numbers coming at us pretty quickly.
What happens on the western side of the basin? You've got Fission, Pierpoint, and Cameco now, and NexGen. What is your expectation for that camp?
I think NextGen is going to get way, way bigger. I believe 63C2 will be many, many tens of millions of pounds incremental from one drill hole. And they're drilling 30,000 meters this winter, right? So we're going to see this winter drill program is going to add a lot of pounds to that 200 million pound number. So we're going to get a growth not only in terms of the number of pounds, but I think we're going to get the dollars per pound we're going to get is going up. What PurePoint has done, it's awesome news. Just if you're not sure if you guys are aware of PurePoint, it's just to the northern border of NextGen's Rook 1 property. It indicates there's mineralization all the way up to there. Really exciting stuff. PurePoint only owns a small portion of it though, which is a drag, and they're partnered with Areva and Cameco, right? Now to the south, you've got Fission. I'm not a big fan of Fission at all for a host of reasons, but they seem to be drilling up more uranium. And, but I think Arrow is going to be right in the center. They got the biggest resource. That big resource is going to really, really grow. And I do believe the western part of the basin is definitely the new frontier in the Athabasca, for sure.
So would you be looking to back other uranium explorers, or is there now too much success in that market?
You know, I don't think so. There's just nobody there, really. It's just PurePoint. They're very, very small. For us, we can't get involved in that. And they have a reasonably healthy valuation right now. And then fission, we would never we wouldn't touch it.
Fair enough.
Yeah.
We've got a few minutes left, and I'd like to hear your expectation for some of the gold names you own. And we've had a nice move in a lot of these stocks. Are you taking profits? And what do you see for value in that space?
Yeah, well, we've been getting, we think the sweet spot in the gold market is the pre-production gold stories, the ones that have, not unlike the example here today would be, let's say, Continental Gold, right? We own names like that, like Dalradian, and you know, but they all have their own hair, right? For instance, Continental Gold already talked about permitting. That's the risk there, is really the permitting risk. With, you know, Dalradian has other risks, and some of our other names they all have different risks. So they're not no one particular gold company is a no-brainer, so we're taking a bit of a basket approach there. So we have half a dozen of these very good pre-production stories, so that if, for instance, if one have a problem with permitting, it's not going to kill us. If one has a problem with mining techniques, it's not going to kill us. If one has a problem with indigenous people, it's not going to hurt us. But that's really, in my opinion, the sweet spot in the gold space, and we've held it, many of these, through the downturn, so we're holding through.
Do you have a favorite in that space?
No, I don't. I can't really get into favorites because, you know, if I was to throw a name out there, you'd say, well, Warren, you said XYZ was a good one. I said, well, and then they got nailed with a permitting issue or nailed with a mining dilution issue. The issue with those is you just want to take more of a basket approach. The reason I'm willing to stick my neck out a little bit more on NextGen is because I look at it, I've looked at these projects for decades, and there's rarely one that I see that has the best country in the world, within that country, the best jurisdiction in the world, the best basin in the world, the best type of mine in that basin, which is a basement-hosted deposit, underground, not an underground sandstone or unconformity-hosted deposit, so in other words, what it is, they don't get the same water problems that a Cigar Lake or McArthur River would get. So it's very extremely rare that you get a situation where there's so many good things lining up behind one name. So I'm comfortable sticking my neck out there. But with my gold names, there is enough hair on each of them that I'm
Do you think Ari will get his permit?
Yeah, it's a good one. I've been down to Buritica twice, and I've been to probably Colombia about 3 times. There is, like Ari said, there is definitely a serious movement going forward from the federal government, and now recently with the new governor in the state level, to move economics forward. They're under big pressure to move mining projects forward because the oil market has been hit so hard. And they're doing a lot of things to help other mining companies in Colombia too, like moving out in FARC, the terrorist group. One terrorist group is getting cleaned up, and then they're dealing with the Marxist terrorist group, which is the ELN. They're getting dealt with a little bit. So there is definitely positive trends happening. So I do believe, absolutely 100%, that mine will get permitted.
Wow.
It's just a matter of how much pain do we have to go through to get those permits. Will it be 6 months? Will it be a year? Will it be 3 months? And you know, there's issues with, you know, there's tons of issues.
You see value there?
You know, there's value if they get a permit. Yeah. And would I be a buyer of this? Would I be a buyer of the stock? Again, like I said, with these gold names, you want to buy a basket of them, but I would definitely have Continental in my basket. Again, so if there are any further hiccups on the permitting side, that hopefully some of the other ones will turn out well. But the reward with Continental is reasonably, like, it's exceptional deposit. It's very good deposit. But you know, everybody knows it's the permitting issues. There's also some garimperos on site, some indigenous miners. How do those get dealt with? Do they get with successfully or not? So there's things you need to deal with. That's why I highly recommend a basket approach. And in that basket, I would recommend Continental to be one of the names.
For the last question, and I'm sorry that our time's gone by so quickly, but for the last question, are there some underappreciated explorers, maybe some small little penny dreadfuls that you think deserve a bit more attention than they're getting today? Drill programs of interest underappreciated CEOs.
In 45 seconds?
Sure.
Like, can I go into do you want mining or oil and gas, or how far can we go?
Both, yeah.
Do you want the coolest, high risk?
Start with that one.
You want the highest, super high risk, super fun story that could really rock and roll if things happen? All right.
Sure.
I know we're going to be over time, so I'm going to go. So this name, in my 30 years, I've never seen anything like it. It is super exciting, and you don't have to take my word for it. The company's name is Canadian Overseas Petroleum, symbol XOP. And I'll tell you why you don't need to take my word for it. There was a press release out, I think, August, September last year. They're partnered in offshore Liberia on Block 13. It's an offshore oil bet. And they're partnered with none other than ExxonMobil. ExxonMobil has the sharpest offshore team, the sharpest scientists, the sharpest people in the world to assess offshore oil prospects. They like this prospect so much, they've farmed into it, paid $130 million to get involved in the prospect. They have agreed, again in the press release late last week, that they're going to spend $120 million to drill a well or two, however far that'll get them, on this Block 13. So if you take a look at Exxon, they spent $130 million to get involved, $120 million on the first one. So they spent $250 million to get involved in this situation. We own 17% of it, and we're the largest shareholder. So I'm definitely speaking my book, but I put my money where my mouth is. We own 17% of this block. And if you just said, well, let's write off the $130 million Exxon put into the project in the first place. And let's say Exxon's committed today, in today's crappy oil environment, to spend $120 million US dollars to drill a prospect, which we get 17% of. The market cap of the company is 20 million Canadian. So you could do the math, 20% of 120 million US. We're carried on that.
That's XOP.
XOP, yeah. So,
interesting.
And I believe if we get a big oil discovery there, we could have a several dollar stock. Stock trades at 4.5 cents. That's the best penny dreadful story I have.
That's the ones that the millennials in the audience would like. I wish I could stay for another half hour with Warren, and he will be here for a couple more hours if you want to chat with him. I'm so grateful for you, for sharing your 200 million pound prediction with CEO readers, and for being right and for being here today. Warren Irwin, thank you so much.
Thank you.
Appreciate it.